What's up everyone, Matthew Winters here and welcome back to my channel. Today we're going to do a trade week recap. We will take a look back how the dividend portfolio is holding up. We've had some back-to-back red days this week in the markets with a few green days sprinkled in there. But don't forget that if you're a long-term investor like myself, red days mean opportunities to enter new positions and also to dollar cost average down current holdings you own. So we'll have a look at what positions I've bought and sold and also have a look how the dividend yield is holding up. Also what the annual payout has grown to, and as always I will let you know why I bought and sold the positions I did. If it's your first time here, don't forget to hit that like button as it really does help grow the channel, and if you enjoy the video, make sure to subscribe for future dividend investing content. Also, if you're new to investing and want to use the same brokerage I do, which is Robinhood, use my link in the description below and you and I will get a free stock with a possibility being valued at a couple $100. It's absolutely free and a great platform to start investing. So if we take a look at the portfolio, we can see we're having a red day and we're down about $177.98. It is changing because it is still trading hours right now, but roughly down about 0.5%. Current portfolio is worth $41,148.63. If we look at the 1 week, we can see we're down $1,254.73, or just about 3%. And if we look at the 1 month, we can see that we're actually up about $144, or 0.35%. Now, if we take a look at Simply Safe dividends, we can see that my annual payout here has increased to $1,168, which is super exciting because we are close to that $1,200 mark. That would break down to about $100 a month that keeps compounding and reinvesting directly back into the portfolio, which to me is absolutely amazing. We can also see over here that my dividend yield for the average overall holdings in my portfolio has slightly increased to 3.01%, and that's because I've started to clean up the portfolio a bit, which we will get into a little bit further into the video, but I'm investing into more companies that have a little bit higher yield with just a little bit less of a safety score, but that's the balance that you must try to find. And last here, we can see that my 5-year dividend growth is at 7%, which basically just means this is how much my income would have grown over the past 5 years if the dividends were withdrawn and not reinvested. So like I had said before, this week I've really tried to focus on cleaning up the portfolio, getting rid of some stocks that were not performing or have cut their dividends, and moving out of some of my speculative plays to move that money into Bitcoin. So that Bitcoin part we will cover in just a few minutes later on in the video. But also, if you look at the diversity of my portfolio, you can see that there are certain sectors that I need to improve on. This week, I saw some good opportunities to dollar cost average some financial and real estate holdings I own, and also enter some new positions, so we will go over that too. So the first holding I sold was Ford. Ford has not been performing well for many years now, but it did still pay out its dividend. However, when the coronavirus obliterated the auto industry, Ford had to cut the dividend, which is definitely understandable, but it just didn't fit into the portfolio any longer. Now, I'm not saying Ford will never be back on my radar, but for now, I decided to let it go. So I sold 42 shares at $5.13 and did secure an overall profit of about $40, not including dividend payments that I had received. And the last 2 positions I sold were part of my speculative portion of my portfolio in the marijuana sector. I sold 9 shares of Canopy Growth at $13.96 and 60 shares of Tilray at $7.45. I did end up securing a profit of about a couple $100 between the both of them, and both holdings do not pay dividends. And the reason I exited my position in both these companies is 2 reasons. One, they don't pay dividends, and as I said before, I'm really trying to clean the portfolio up. I'm trying to move money into safe dividend stocks with a decent yield and potential for growth both in stock price and dividend payouts. And my second reason is I feel that my speculative portion of the portfolio would better be suited in Bitcoin. Bitcoin is a wonderful hedge against inflation, which, let's be honest, it seems we are headed that way. And with Bitcoin, it's either going to go to 0 or $1 million. And personally, I like that risk versus reward. So Going forth, when I add to my speculative portion of the portfolio, which is not large, but it is there, it will be in Bitcoin and maybe some Litecoin too. So those are the holdings that I sold and got rid of. Now let's take a look at the positions that I dollar cost averaged down and also new positions that I added. So Verizon is a new position I added. I bought 3 shares at $54.51. They have a safety dividend score of 87, which is very safe, and an average 5-year dividend yield of 4.51%. Also, Verizon has an uninterrupted dividend streak of 29 plus years with a consistent dividend growth for 13 years. So next is Raytheon. I bought 2 shares at $51.97 for a dollar cost average. After that, Magellan Midstream. I bought 5 shares at $41.40, which again was a dollar cost average. at&t, I bought 10 shares at $28.19 for a dollar cost average. McDonald's is another new holding in the portfolio. I bought 2 shares at $172.29. McDonald's has a dividend safety score of 77, which is safe, and an average 5-year dividend yield of 2.89%. McDonald's also has an uninterrupted dividend streak of 45 plus years with continued dividend growth for the same amount, 45 years. I also want to add that in late March, McDonald's stated that dividend payouts remain a paramount priority, which is something that dividend investors always want to hear. After that, we have Johnson & Johnson, where I bought 2 shares at $146.39 for a dollar cost average. Another new addition this week, helping me bump up my real estate portion of the portfolio, is Digital Realty Trust. They are one of the largest publicly traded REITs in the country, and they support the data center needs of more than 2,300 customers across industries such as financial services, information technology, and also manufacturing. They have a dividend safety score of 94, which is very safe, and an average 5-year dividend yield of 3.43%. Digital Realty Trust also has a 16-year of both uninterrupted dividends and continued dividend growth. Next, we can see that Tilray, which we already went over that, being sold. Deposit, we can see a dividend it hit from Apple. We can see we already talked about the Canopy Growth sales. So I bought Coca-Cola 5 shares at $43.41, which was a dollar cost average. And the last new holding added this week, which helped improve the financial sector of my portfolio, is Bank First Corporation. This one here is a dollar cost average, but I first entered the position on Monday. I bought 5 shares at $34.38, and then I've been dollar cost averaging it throughout the week. Bank First has a safety dividend score of 99, which is very safe, and a 5-year average dividend yield of 3.99%. Bank First has both an uninterrupted dividend streak and dividend growth of 27 years. And before we close out, guys, I just want to show you what dividend payouts we have coming up. As time goes on, these payments are getting bigger and bigger as we keep adding and dollar cost averaging solid, healthy positions. So as a dividend investor, this is just absolutely awesome to see. We can see June 10th, so looking out a few weeks, we have $8.70 from ExxonMobil, $3.76 from Norfolk Southern, $1.14 from Pfizer, $4.90 from Valero, $3 from Visa, $1.62 from Walmart, $7.65 from Wells Fargo, $6.60 from Intel, $1.60 from the Cohen & Steers Income Realty Fund, $2.05 from Starbucks, 25 cents from Apache, which I ended up selling, and I went over that a couple videos ago, but I didn't have much of a holding there. $3.09 from Caterpillar, $10.28 from Magellan Midstream, which is a killer dividend right there. I mean, $10.28 is awesome. $2.33 from Realty Income, and $7.73 from National Retail Properties. So it all adds up, guys, and trust me, it is a great feeling seeing these payouts. Anyway, I hope you enjoyed the weekly recap. If you did, make sure to smash that like button because it really does help out this little channel. And as always, if you want to follow me on my dividend journey, make sure to hit that subscribe button. If you're new to investing and want to use the same brokerage I do, which is Robinhood, use my link in the description below and you and I will get a free stock with a possibility being valued at a couple $100s. It's absolutely free and it's a great platform to start investing. Anyway, trade safe, take care.